If you've been watching the crypto markets lately, you already know things have been anything but calm. But here's what almost no one is talking about. The recent slide in Bitcoin hasn't just shaken retail investors, hedge funds, or crypto startups. It's actually taken a serious bite out of the Trump family's crypto-linked wealth. And the numbers behind this sudden drop are raising big questions about the future of political involvement in digital assets, the volatility of crypto-exposed portfolios, and what this moment means for everyday investors trying to navigate an unpredictable financial world. Over the past few weeks, Bitcoin's sharp decline has erased billions from the global crypto market. And because of how aggressively the Trump family positioned themselves around crypto-related ventures, NFTs, and blockchain-based partnerships, their overall crypto-linked portfolio has taken a noticeable hit. This isn't speculation. Public filings, on-chain data, and financial disclosures all show the same trend. When Bitcoin slides, the value of anything tethered to the crypto ecosystem slides with it. Let's break down what actually happened. Throughout 2023 and 2024, the Trump family was highly active in the digital asset space. From NFT collections that generated tens of millions of dollars, to licensing deals tied to blockchain-based platforms, to positions in companies that rise or fall based on crypto sentiment, they created a meaningful exposure to the crypto economy. For a while, this strategy looked like a bold win. Bitcoin was pumping, crypto adoption was growing, and political interest in digital assets was exploding. But that's the thing about crypto. It giveth, and it taketh away. Fast as Bitcoin dropped in recent weeks, everything connected to it followed. NFT floor prices softened. Token-related royalty revenue declined. Crypto-sensitive companies saw their valuations adjust downward. Even market enthusiasm around digital asset-linked brands cooled off. Combined, this created a compounding effect on the Trump family's overall crypto-linked wealth. Wealth that, just weeks ago, was climbing, is now down sharply. But here's the part many people misunderstand. This isn't simply a story about one political family's financial hit. It's a story about the bigger lesson the market is shouting right now. Crypto wealth is not the same as stable wealth. Even high-profile individuals with massive platforms, strong branding, and political influence can't escape one fundamental truth. If your net worth is tied to Bitcoin, you're riding the same roller coaster as everyone else. And the roller coaster is showing no signs of slowing down. For everyday investors, this moment is more than just news. It's a reminder that when big names jump into crypto, it can make the ecosystem look safer, more predictable, or more mainstream than it actually is. But behind the scenes, the same volatility applies to everyone. Whether you're an average investor trying to build a small crypto portfolio or a former president with a massive public presence and global influence. What makes this even more interesting is how it plays into the political narrative. He has often presented himself as supportive of digital assets and new technology. He's repeatedly stated that America should lead the world in blockchain innovation and has publicly criticized attempts to over-regulate digital assets. But now, as his own crypto-connected wealth takes a hit, it raises a new question. Will political leaders continue pushing digital asset agendas when the financial downside becomes more personal? Because here's the reality. When political figures gain or lose wealth from market movements, the incentives shift. If crypto rebounds, the narrative strengthens. If it keeps sliding, the political tone may change. And if the public begins associating political families with large crypto losses, that could influence how voters perceive the space altogether. But let's zoom out even further. The Trump family's wealth dip is a micro-example of something happening across the entire U.S. economy. High-volatility assets are starting to hit people where it hurts. Families relying on crypto gains have seen their net worth shrink. Small businesses that accepted digital assets are reassessing their strategy. Even large corporations with blockchain exposure are rebalancing risk. The message is clear. When Bitcoin moves, the ripple effects spread far wider than the crypto industry itself. And for investors watching all of this unfold, the key question is simple. Should you worry? Here's the honest answer. You shouldn't panic, but you absolutely should pay attention. Markets are cyclical. Volatility is predictable even when price direction isn't. And major pullbacks like this often separate emotional investors from strategic ones. The people who survive and win long-term aren't the ones who ignore the risk. They're the ones who understand it, manage it, and refuse to get caught in the hype. Whether you support Trump or not doesn't matter. Whether you own Bitcoin or not doesn't matter. The lesson is universal. If your wealth depends on crypto, you need a plan for both the ups and the downs. No portfolio is immune, not even one with global recognition and political power attached to it. And if anything, this moment should remind investors that public figures can influence markets, but they can't control them. Price doesn't care about politics. Bitcoin doesn't care about branding. Crypto moves on sentiment, liquidity, momentum, and macro forces. And right now, those forces are creating a reality check across the entire ecosystem that if you found this breakdown helpful and you want more clear, unbiased insights into crypto, finance, and the trends shaping America's economic future, make sure you hit that like button, subscribe to the channel, and turn on notifications so you never miss an update. This is Next Gen Finance, and we'll see you in the next video.